I know many people are frustrated with their share investment, not just in ILUS, but in many holdings. For those reluctantly holding their shares, be it ILUS or other tickers or whatever, due to the current share price, what is your advice to those down during this economic recession, pullback, correction, whatever the hell we're calling it right now? I don't know what it's being labeled these days, but what's your advice to people that are feeling down and out?
Oh, yeah. And there is a lot of that, and it's very heartbreaking because, with wisdom and, years investing, that you see that these normal market cycles, even though this is a historically significant recession, they happen over and over again, usually on par with every 7 to 10 years. And the same exact behavior and psychology takes over. And when you look at the S curve of investing, it goes all the way up to euphoria at the top when you're in the bull market and everything's going great, all the way down to depression and capitulation on the bottom end, where everybody just says, oh, this is a scam, it's fake, and they sell their shares. But in my opinion, the biggest problem is, and I'll just focus on ILUS, but this really applies to every stock, is I always dollar cost average. Always, because you can never time the market. You never know when it's going to go up or down or stay down. I never thought we were going to get anywhere near where we are right now. But I started buying at ILUS at 4 cents. I paid as much as 44 cents, and I bought it all the way going up, and I bought it all the way coming down. And I did end up adding more money when the share price got lower because, again, you're getting more bang for your buck. But I have absolutely no problems with the fact that I paid 44 cents and 38 cents and 40 cents because my average is still at 12 cents. And every week that we stay below 12 cents, I'm bringing the average that I have down. But what I think the major malfunction is people trading without a plan. You have to have a plan, because if you don't know what your plan is and what you're trying to do, then it's very difficult to make the correct decision. So there's nothing wrong with buying a company that's skyrocketing. ILUS went, I think it was 11 days. It pushed from 4 cents all the way up to the 51, and then it took 10 months or whatever it was to get all the way back down. Is if you bought it at that point, you need to have your plan, which should be, as soon as it goes up X amount, I sell. And if it starts to drop even a little bit, I sell, because you have to save your money. But what people did is, after they missed the point where they purchased it, so now they were down money and they didn't want to sell, they basically pivoted to becoming long-term shareholders. And no long-term shareholders, at least successful ones, bought all their shares during the last spike. It's not to say in this case, because our company has good fundamentals, that we will go past 51 cents in the next bull market, is my belief. But if you're buying any other company or a hype stock or this and that, there's a good chance you'll never reach those peaks again. And so it can be really detrimental to people. But if the one piece of advice I would give them is, because ILUS is that unicorn, and because we all know so much about it with the hard work of people like Eagle doing wonderful due diligence and all the great opinions on the Discord, that I've been just averaging down and just constantly buying shares. And you can tell the difference between the newer investors and the older investors, because the older investors know what's going on right now is that your stock is on sale. You can buy more of it for cheaper. And when it recovers and it's worth between 50 cents and $1, is my guess for the next, that you can make a lot like that. And a lot of people can make very significant gains. Whereas traditionally in a good market or a bull market, is that the stock is almost always trading for many multiples of its earnings. Whereas right now we're actually trading under the earnings that we expect to have when they close QIND. The one thing I would also add to that is, having a plan makes it so much easier to know what you want to do. So for example, right now we're in extreme fear. So everybody should be buying stocks, and almost any stock at this level is going to go up some amount when the markets recover. But then when we get to the next greed cycle, which I don't see happening for at least 2 years, 3 years, which is why I was happy to lock my shares up, that's when you want to start selling. When you hear people on the street saying, hey, I'm thinking about buying into the stock market now because everybody's making so much money, that means the end is near, time to get out. And it's difficult for people to do that because they're scared to sell at the top for greed, because they don't want to miss out on more money. and they're too scared to buy when it's on sale and it's all super down because they're fearful. And once you just master those two elements and flip them and start doing the opposite of what your brain tells you to do, it becomes very easy to be successful. But the hardest part is actually just being able to hold and wait.
Yeah. And this is one lesson that I have learned. I remember when I was very content with my 50,000 shares, and I'm looking at this as not an obstacle, but an opportunity. And if you would have told me a year ago, yeah, you're going to have 330,000 shares of ILUS, I would have told you, no way. But I got those things on a discount. And so I'm going to remind people too to stay positive and trade your plan. All right. So yeah, I'm very happy about where we're at now, because it's giving us an opportunity. I know people are probably thinking like, oh my God, why are you happy? Because this is creating an opportunity. So we got to capitalize on that.
Yeah. The one thing I would add for that is that I don't ever try to buy hype stocks or try to buy in. I love when I ask technical analysis people what a company does, and they go, who cares? Is that if you buy a company that has great fundamentals, especially a company like ILUS, all you have to do is wait at these levels and we're going to make money. The only question is how much money. And so no matter what anybody paid for this, it's going above 51 cents again. It might take 2 years if the market tanks further or we have a crash in October, but it's unlikely. But it's really, really nice to have that quote unquote insurance behind you, knowing that you invested in a good, real company that's going to keep growing, because so many other people bought companies that they think they're going to get out of this pit when the market recovers. But those companies will never really recover much. They will go up from these levels because everything's at 52-week lows, but they will not recover and keep growing like ILUS will, where, last quarter we did 19.5 million, right? Everybody can't wait to see what's going on now with us being on pace to do the 140 million run rate. And so it's very, very exciting to know that we finally got a unicorn, and that if we sit and hold this, that there's no reason it's not going to turn into, the next GE or, Berkshire Hathaway.
And you know what? The truth is, no other OTC is accomplishing what these guys are doing. And it is being covered up by the markets right now. It's not being noticed because of the market situation that we're in, I would think. So, $140 million rev rate for 2022. And I think, aren't we on pace? I think they said 1 billion by the end of 2023.
Correct.
Yeah. I mean, it's remarkable. And the share is 7 cents right now. So like I said, ultra discounts. So
yeah, and the really nice thing about that is I am by no means an expert. I love technical analysis for entry points and exit points. But fundamentals is my bread and butter, and that's how I've continued to be successful trading, because, if you pick good companies that keep making money, and then when you see that changing before the market or before the people's psychology catches up to what the actual market value is of the company, I'm already long gone, because I saw that share go down, and I saw that they're losing ground, that they're cutting dividends, or doing this or they're doing that. And so that's kind of a big deal, right? So it works very well.